I'd like to share with you today about a case that got me wondering, what if? In my line of work, over the last 21 years, I've met people from different age groups. And the most common thing that I see with the younger generation is there is no evident or obvious need for life insurance. They're more excited about having their money invested in asset classes that can earn them a bigger return, or maybe even spending that money on lifestyle choices rather than purchasing or securing a life insurance policy. And thinking back to when I was at that age, I totally understand why that is a bigger need to make and grow your money versus secure life insurance when you may not have any dependents. The case I refer to goes back a few years now, and I met this entrepreneur at the age of 34 who had spent 9 years as a flight attendant in a prominent airline, was single, had no dependents except his pets. He was an avid animal lover and spent a lot of money on fitness and on lifestyle. He had no reason to secure a life insurance policy. Over the last few years, he developed and owned a significant amount of a property portfolio, the rental income of which was more than sufficient to take care of his lifestyle choices. At this point in time, an individual who's 34 years old, making sufficient amount of money from his assets to cover all his lifestyle choices, didn't require a life insurance product, or so it would seem. The need, however, was very relevant for critical illness to be in place, because the need over there was, if he was unable to earn an income for a while, then the buffer would come from the payout of a critical illness payout. Having said that, over the years, a couple of things changed with this individual. And while he was a very successful entrepreneur, making the right investment choices with assets that constantly tended to give him a regular income stream with zero debt, he decided to then become a parent. Well, in the past 3 years, he went from being a single individual with no financial dependence to now becoming a single parent. And his thought process on what is required today changed completely. From 3 years ago, our conversations meant he had nobody to leave behind a life insurance payout to. Versus today, his thought process is he needs to make sure that his child had at least $100,000 a year as income that came out in addition to the assets that were taking care of the regular expenditure. So it was evident now that there was a need for a good and restructured life insurance policy. The good thing in this case was 3 years later, when he decided to go about and purchase his life insurance policy, he was accepted at standard rates, was given the perfect life insurance product. It took care of all his needs. His son's education and lifestyle would continue to remain the same even in his absence. The assets that he created in terms of property would still continue to pay out a regular income. And since then, he's been able to come up with an additional source of income. However, this entire situation could have gone pear-shaped very easily. I've come across the flip side of the situation in my years as a financial advisor, where people who didn't purchase the right life insurance contract at the right point in time were now declined cover by insurers when they needed it, based on the fact that either their health had changed or the social circumstances had changed. And by social circumstances, it could mean something as simple as travel schedules. While your previous job may not have required you to take these regular trips and regular travels to unknown or uncharted parts of the world where a level of risk could be significantly greater than living in a cosmopolitan city like Dubai. Or a situation could have come on which is related to health, which leaves you now uninsurable. The thing to really consider is, while there is a requirement for a payment of premiums to be able to purchase a life insurance policy, that is not the only prerequisite. The prerequisite usually is that you clear a medical examination that shows that you are medically fit to purchase a life insurance policy, because this means you are in the best class of risk for the insurance company. There are no insurance companies that exist that want to willingly take on a risk on a life insurance policy with a substandard life or someone who has a host of medical conditions. And the way insurance companies deal with this situation is they charge either a very high premium to that individual, and in many cases also decline cover completely. There is a cost associated with procrastination. If you consider somebody aged 34 years old looking to purchase a life insurance policy, let's say at about $100 a month, assuming he defers the decision by 1 year, that same policy would now probably cost him about $108 to $110 a month. That's not a very big difference. But if you sum that up into a 35-year term, you're talking about roughly $3,500 US, which could have been invested in equity markets that could give you a significant return. And while my example of $100 a month gives you an idea of the premiums or the hike in premiums, it certainly is not the average premium of our clients. The average premium of our clients who purchase term insurance from us is still north of about $800 a month. Consider a 10% growth on that. The maximum we've seen premiums paid into life insurance policies with our clientele is about $25,000 to $30,000 a month on pure term insurance plans. Consider an 8 or 10% growth in premiums because of deferring a decision to purchase a life insurance policy. This could be significant over the years and can snowball into a whole different number. Consider the probability of being unable to purchase that insurance now because of ill health. If you are a successful entrepreneur that's constantly looking at growth by leveraging your positions with bank to grow your business, then you might want to consider the cost of not having the right insurance coverage in place today when you are physically fit. In that kind of a situation, being unable to purchase a life insurance policy may disqualify you from being able to borrow from banks, whether this is for a mortgage on your property or as a key man life insurance policy for your business. In these cases, the cost of not purchasing a policy at the right time could be exponential. The last thing I'm going to say over here is purchasing life insurance or critical illness cover is never going to be the sexy option. As unsexy as it is to purchase a life insurance with critical illness right now versus having your money invested in your business, in your assets and considering growth, it might be in your interest to purchase that life insurance product with the right level of critical illness cover now when you are in great health and the premiums cost you less.